Welcome back to the show. Let's talk to Ricardo Evangelista. I think I said that right. Well done. Senior Executive Officer for ActivTrades. Ricardo, very good morning to you. You're a currency specialist. We talked off there. We're going to talk initially about dollar yen. A big chart point 108. Obviously safe haven status. Sigma is big fund manager group. One of their fund managers said that he was basically pulling out of Japanese equities because of the strength of the yen and potential strength of the yen moving forward. What's your take on dollar yen at the moment?
Well, dollar yen is influenced by two vectors mainly. So we have the geopolitical situation, obviously with a threat from North Korea, the situation, the way it's unfolding, perhaps not being perfectly handled by all the actors, more specifically by the big superpower, the US and its president, Mr. Trump, sort of throwing gasoline into the fire there a little bit. So with the yen holding the status of the safe haven, in terms of currencies, the safe haven per excellence, perhaps together with the Swiss franc, obviously that will be a point that will make it attractive to investors. And on the other hand, we have perhaps a certain weakness on the dollar side, which would be coming from a cooling down in the atmosphere surrounding a potential further raise in the interest rates. We saw last Friday that the jobs numbers, the non-farm payrolls, came up below expectation.
Yep.
It's sort of normal to get that sort of failure in August. Historically, that economists don't do a very good job at predicting the August figure, but still, it came up short, and also the actual unemployment increased as well. So American economy giving some signs of cooling down, less likely to for the Fed to rise the interest rates. Even yesterday we had someone from the Fed saying that it is less likely it will happen as soon as some people predicted. Therefore, I think the dollar yen, the outlook for it will be to perhaps follow the current trend, which very much is for the yen to gain terrain against the dollar.
Understood. Let's move on then to euro dollar. Obviously, again, another big level, 120. A few sellers came out of the woodwork. Obviously, a fantastic run. What are your thoughts on euro dollar?
Well, there's an interesting dynamic there. All eyes and ears will be on tomorrow's meeting.
ECB.
Yes, exactly, of the ECB, and specifically on the tone of the announcement that will follow it. It will be interesting to see how ECB's president Mario Draghi manages this tone when he communicates with the world at large after this meeting. There are some concerns for the euro regarding the high value of the currency, though that is likely to have an impact on the inflation for the eurozone.
Yep.
We have, I think, the target in place is 2%. The more recent figures point at 1.2%. So that sort of makes it difficult to manage for the ECB. We'll see how he speaks tomorrow. If he does not send out some sort of coded message that it's time to stop this euro frenzy, then I mean I wouldn't be entirely surprised if we were to see, say, 125.
Right.
Yeah.
Okay. Yeah. That's on the tape now. You're leading the market. Let's move on to cable, the Great British Pound. It doesn't feel great at the moment. We've had fundamentalists suggest that the fair value in terms of purchasing power should be around at 140. We've seen technical analysts come on and say this is going down to 120. And we've had other sort of commentators say don't trade this market, it's too difficult. What are your thoughts?
It is difficult. I was probably aligned with the third school of thought there. It is difficult. In my view, the main reason for it to be difficult at the moment, to try to guess where it's going to go, is to do with the fact that most of what can happen is already factored into the current value of the pound. So we're still seeing great uncertainty in terms of the political atmosphere around Brexit negotiations. Even last night we had another leaked document regarding the immigration policy that is to be adopted. It didn't seem to have much of an impact. Normally one would perhaps expect it to hit the pound and generate...
but I read it was a working document.
Exactly. Still it made the first, the headlines for most of the online publications, and normally that sort of thing would have had some sort of an impact, even if it was like a drop of water, but some sort of impact. It didn't. So I think a lot of what may come in the next few times is already factored into the value of the currency. And as I said, I would probably align with the ones that think that is very difficult to predict at the moment.
Well, the Japanese would say there's a time to buy, time to sell, and there's time to do nothing. And I've looked at that contract, and it's very, very difficult. Give me a final thought as we go into the fall. September's obviously a bad month historically for stock markets. Is there any real worries for you in terms of any asset class at the moment?
Well, we're seeing that equities have been suffering on the back of the geopolitical instability. We see Asian equities mainly, and even this morning I think the openings were low. So geopolitical instability caused by the tension in the Korean peninsula can have a strong impact. I think the next non-farm payrolls as well will be quite determinant in establishing whether or not we'll see a further interest rate increase before the end of the year. And also tomorrow's discussions and after President Draghi's, ECB President Draghi, Mario Draghi speech, we'll see how that unfolds. But I would say that the most interesting points that we must keep an eye on are definitely the geopolitical instability caused by the crisis in Korea, and also what happens with the next American employment numbers too.
Ricardo, thank you very much for your time.
Pleasure, Nick.